everyone keeps waiting for some big sign that is finally okay to buy. And I think that sign already showed up this week, but most people just read it completely different. So here's what actually happened. The Bank of Canada met again and basically sat on their hands. They held the interest rate at 2.25%.
Today, the Governing Council maintained the policy interest rate at 2.25%. Since our April decision, the economic impact of the ongoing conflict in the Middle East has increased. Higher energy prices and disruptions in global supply chains are weighing on global growth and pushing up inflation worldwide. At the same time, the U.S. administration continues to propose new tariffs, and trade policy uncertainty remains elevated. Against this backdrop, the Canadian economy has remained soft and inflation has increased. Monetary policy continues to be focused on ensuring that higher energy prices do not turn into persistent inflation, while helping the economy adjust to headwinds. We are committed to keeping inflation low and stable over time.
So your mortgage is not getting cheaper this month and it's not getting more expensive. They just hit pause. And every time that happens, I see the same little wave of stress online. Do I go fixed? Do I go variable? Should I just wait? So I thought I would just walk you through it and show you what things really look like. First thing, and this is the one I really want you to hear. A lot of people are holding off on buying because they are waiting for rates to drop. I totally get the instinct, but here's something that doesn't get said enough. The big banks like RBC, TD are forecasting rates to mostly stay parked around 2 to 2.75% range through 2026. What that means, the big dramatic rate cut a lot of people are holding out for, the forecast says it's probably just not coming. You might be waiting on something that is not really on the way. And here's the part that is actually kind of freeing. The fixed rates does not even wait for the Bank of Canada. They move ahead of time based on what bonds market expects. So by the time the bank actually cuts, the fixed rate that you were holding for has usually already shifted. So you can let go of trying perfectly to time it because realistically nobody can. And just to be clear, I'm not your mortgage broker. I'm sharing my perspective as a realtor. And when it comes to choosing between fixed and variable, you should always speak with your qualified mortgage broker, who can look at your specific situation and give you advice that is tailored to your everyday finances and goals are different. So what does all of this actually mean for the housing market? Well, when rates stop moving, the market start paying attention to something else, the homes themselves. For the last couple of years, almost every conversation came back to interest rates. Buyers were nervous, sellers were frustrated, and rates become the explanation for everything. But now that rates have been relatively stable, we are starting to focus on homes instead. We started to see which homes were priced correctly and which ones were not. That's why you are seeing inventory continue to build in many parts of the GTA, especially in the condo and pre-construction market. And for buyers, that's not necessarily a bad thing. There is more selection, less pressure to make a rush decision. And in many cases, sellers are becoming much more realistic and open for negotiation. So while the headlines might make it feel like there is a constant drama in the market, the reality on the ground is often much calmer. So for buyers who are financially ready, this is one of the more balanced markets we have seen in a while. You have options, you have time to think, and you have room to negotiate. So how to navigate this market? So if you are thinking about making a move, here's how I would actually approach it in 3 simple things. The first step is talk to your mortgage broker, not just your own bank. Rates vary more than people expect, and a broker shops around for you. The second thing, just do the math on your situation. Run your own numbers. on a typical mortgage, a small rate difference can come out to something like $68 a month. What that means, sometimes the rate you are losing sleep over is about a dinner out difference. So don't let it freeze you in a place. The third step is match the mortgage to your life, not to the news cycle. Think you will move in a couple of years. Could be variable, lower penalty is your friend. Or if you are planning to settle in, could be fixed rate is your best choice. What that means, the right answer is really about your plans, not about outguessing the bank. I wanted to address something from my last video. I received quite a few negative comments from people who felt that I was telling everyone to go out and buy home right now. That's actually not what I was saying. Real estate is not one size fits all. For some people, buying today makes sense. For others, waiting might be a better decision. So it depends on your finances, your goals, your personal situation. What surprised me was not that people disagreed. Actually, disagreement is healthy. Different opinions are what creates conversation. What surprised me was how quickly some people jumped to negative comments instead of simply sharing their perspective respectfully. You can disagree with someone without attacking them. There are plenty of creators out there with different viewpoints, and you are free to follow the ones that are aligned more with your viewpoints. I personally enjoy hearing different viewpoints because none of us has the crystal ball. Nobody knows exactly what the market will do next. At the end of the day, people don't wake up one morning, watch 5 minutes video, and then suddenly they make $1 million decision. Most buyers do their research, talk to professionals, review their finances, and carefully consider the consequences before making the decision. So my goal as a realtor is not to tell people what to do. My goal is to share information, share my perspective, and help people make their own decision, their sound decision. So I appreciate that you are watching. Thank you for watching, and I'll see you in the next video.